to our next and our last session of the day, building an investable pipeline for climate tech. So India presents a very vast and complex landscape for climate tech investments. Our last session today will delve into the critical strategies and challenges of building a robust investable pipeline in this dynamic sector. It will explore how to identify, assess, and nurture early-stage climate tech startups, focusing on some key areas. Our session panelists for the same include Maya Chandrasekharan, co-founder and partner at Green Artha; Nachiket Kulkarni, who will also be moderating the session; AVP Social Entrepreneurship at NSR Cell; Nihal Chodial, Senior Program Manager at NSR Cell; Rayan Shingati, co-founder and managing partner at Transition VC. Over to you, Nachiket.
Whoever you know outside, please call them inside. Whoever is inside, please come in the forward 3-4 rows. So last session, last day, trying to keep it interesting. But I think before we start, maybe a very, very quick introduction of who we are. Maya, you want to go first?
I'm Maya Chandrasekharan. I'm the co-founder of Green Artha, which is a climate investment firm.
Hi, Nachiket here. I lead the social impact tracks in NSRCL, which is an incubator in IIM Bangalore.
Nihal here. I look at climate tech specifically at NSRCL, and together Nachi and I are trying to catalyze an ecosystem which we believe today is in need of this. So, yeah.
Hi everyone, my name is Rayan Shingati. I am the managing partner at Transition VC. At Transition VC, we focus on investing seed capital in energy transition specific startups. We'll talk a lot more about it. Thank you for your time.
Okay, so the way we're going to go about it is we're going to have a lot more focus on whoever is sitting in the front. And we want it shouldn't be a panel. Probably we want inputs from you. And the way I want to set it up is talk about what's happening in the world in terms of which sectors have taken off, which sectors have not taken off, and where is the potential, and what does it actually take to build an investable pipeline in climate tech, right? I get a clicker? Cool. Okay, not a periodic table, but this is from Holon's published list of different things happening in the world of climate tech. In terms of legends, what's in green is something that is picked up. Some of you may have worked in this place. Mobility, circularity, data, recycling, mostly B2B again, solar. So certain really good examples of scale across the world. Certain sectors in orange, which are pretty much coming out. And essentially what we're trying to pull out here is, and we can extrapolate this to the Indian landscape as well, right? But we probably have taken 10 years to make this dent, and we don't want 10 more years to sort of not look at the opportunities in the white boxes. I think I'll probably stop here, and maybe Nihal or Maya, you guys can make some comment on, let's say, the green boxes.
Just, I think, before that, when you look at climate tech as a space, it's important to demystify this term climate tech, right? I think climate tech has various definitions according to who you are as a stakeholder. VC may define it differently, an incubator may define it differently. And so this framework essentially allows us to say sectorally what are large buckets. And when you look at energy, environment, and infrastructure, this allows us to then create a second pivot point and then analyze the kind of innovation that we have, right? So I think with that perspective in mind, Maya and Ryan, Maya first, I just want to get a sense of where you think the Indian landscape is today. I think the green highlights give us some indication, but what we really want to understand is, while you speak about these green highlights and areas that you've come across with some examples, really trying to understand the tailwinds that have created for this, right? You look at China, and there have been tailwinds of EV. Did we just go in and replicate that? Or are there policy, government, market tailwinds that have helped create something similar in India?
Okay, so a couple of things, and I'll also in the interest of time, try to be quick, so I won't go into specific details. But in terms of the green areas, all of them have, it's been a combination of different things, which is why we say ecosystem, right? It's not just one stakeholder that's able to bring all of these together. There has been policy, there has been increasing finance that's available. Also, we have to call out the fact that we have some great entrepreneurs who are now able to scale. They have also seen examples of what scale looks like, and they're able to replicate that at their levels. And we also are at the point where the market is asking for these products and services and solutions. So it's everything from the customer to the entrepreneur to the capital to the policymakers coming together for the green areas. I will say that I think some of the areas that are pointed out here, which are in white, maybe are a little bit more on the orange side in India, just because they are large existing markets. They need to maybe transition more from a climate perspective, but these are existing markets, and so my sense is that they will move from white to orange to green much faster with all of this.
Any specific examples?
Heat and cool, construction. I think all of these are already starting to see some momentum. So I'll pause here and let Ryan.
So the question is tailwinds, right? I think as India, we're very cost sensitive. So there is room for technology innovations in areas which not only enables reduction in carbon footprint, but also reduces cost. So I think a sweet spot there is where the opportunity lies. And that's exactly what we've seen in mobility happen, right? So why is there such a big pickup in e-mobility, especially in B2B sector, deliveries, etc.? Because the total cost of ownership makes sense. 1 rupee per kilometer is a possibility, right? So I think for India especially, I think a combination of cost reduction along with ensuring there's some tech disruption, focusing on decarbonization is what will probably fly, in my opinion. Because again, there isn't much philanthropic capital that's coming in. So that's where our focus is.
Awesome, you brought up that point. I think we'll get there in less than 5 minutes. But yeah, talking about tailwinds, right? I think the slide is a bit distorted, this graphic. But yeah, so I think on the right side, on my right side, you see certain hero ventures that you may have probably come across in the ecosystem, from Recycle to VVoice to Renew Power. But what we're trying to say here is, and obviously some of you work in this space, is to create such heroes, there needs to be a lot happening in the background, which means to have an investable pipeline, I need to have an ecosystem level work going on. And I think, one of our faculty chairperson right now, Professor Srivardhani Jha, she's written a paper on it in detail. But a lot of factors come into play, and I think Nihal will probably explain this with a good example.
I think I just want to quickly go down each one of them. Specifically, when Professor Srivardhani wrote this, she was trying to address what makes for a strong ecosystem, right? And I think when you look at the world of e-commerce, typically you've had the Flipkarts and Amazons of the world come in and catalyze the value chain. And suddenly you need, let's say, inventory management software. Suddenly you need, cart checkout solution and so on, because there is this big titan that is catalyzing the space. And I think one of the first factors that she identified as well is these market leaders creating a sort of momentum for the categories and industries. And so maybe I thought both of you, Maya, Ryan, any examples of these kind of titans that you've seen really come in and either make category or come into a category and define themselves?
This is obviously one that everyone has talked about, but I think it is worth calling out the fact that mobility in itself, or electric mobility, was a new category. We've had a lot of people in other sessions talk about how some of the companies were actually in their anti-portfolio, and they were very regretful of the fact that they didn't put money into them. But what's happened as a result of that is there's an ecosystem that's been formed around that from, different inputs that are required for those kinds of industries, as well as talent that has come out of that. Just as you have the PayPal mafia, we have folks that have come out of some of these leading companies, the Aethers, the Log9s, the Olas of the world, who all have an understanding of now what it is to build for scale and have different businesses that they can also take to the market. It's emerging. These are obviously earlier stage, but because they've seen it happen before, they've been part of the operational growth, they should be able to also accelerate their own company growth in a way that the pioneers were not able to.
Fantastic.
I think it's a natural progression, right? So we've seen it. So if I just look at the 3 companies that we've invested in, which we've announced, all the founders have come out from in this ecosystem, right? Both the new one and the old. So for example, we invested in Emo. So the founders were ex-Ola, ex-Ather, ex-Tesla, ex-Rivian, and they've come back and built here. The second company we invested in called Mattel, the founders were ex-Suzuki. And ex-Crompton. So I think it's a mix of both, ex-Bajaj as well, right? So it's a mix of both, and they can come and identify this opportunity and start building. So I think that is perhaps the way to go, but that doesn't mean if someone without that much pedigree cannot build something. The best example is Ather. So they came out of IIT Madras, and when no one even imagined that EV scooter is possibility, they built it when everyone else made fun of them, right? So I think it's a mix of both, but yes, we need to contribute towards building ecosystems so these champions come out.
I think we should start calling them friends more than mafia. I think friends of fresh work and friends from Flipkart.
The mafia sounds cool, man. I like mafia.
I think you should need a combination of both, because these guys, not only are they becoming serial entrepreneurs, they're going to deploy capital into other upcoming entrepreneurs as well. So I think we need a combination of both the words, because I think that's what I'm going to get to next. It's a combination of philanthropic capital and wealth creation capital. Anything before we go there?
I think before that though, I'm just curious to see where you guys hang out, right? What are some of these forums, communities, places that you find pipeline, find insight, learn about the space more? Because as that framework says, critical to building ecosystem, and having that ecosystem effect is being able to dig for information. So
I think a lot of credit should go to Maya, because she does bring everyone together. So she is the one who'll tell you more about it.
Thank you. Apologies, I'm going to answer and then leave for the airport. There's a lot that's happening. I think the ecosystem has really developed in the last couple of years. It used to be hard for people to be able to find information, to find their peers, to be able to share insights with each other. There have been some great forums that have come together, and I'm just going to call out a few. I'm also going to apologize if I'm missing people who are doing great work, but obviously convenings like this are important. There are also the informal groups, and they used to be called support systems. Now I think they're just very, very hefty, powerful networks. So people like Sus Mafia. There are WhatsApp groups for climate tech investors and for climate tech
Seeders Club.
There are many WhatsApp groups for climate investors, climate entrepreneurs, for climate policymakers, for everyone to come together. There are groups for women working in climate. So I think that it is just a reflection of how many great people there are in the space and how the space is coming together with a community feel. People are very, very generous with insights. People are very generous with help. So that part, that box, I think, is definitely getting addressed, which is part of what's building the momentum.
Cool.
Yeah, I think the weather is making Maya run, but
it's 4:25. You still have hope if you want to stay for 10 more minutes. Okay,
Yeah.
thank you.
But I think just before we close out that, Nachiket, lastly, Ryan, to you, when you started Transition VC, you said you'd pick out energy as a section. You carved it out. When you were figuring out your thesis, right, and even before you arrived at energy, you must have compared the Indian market 2-3 years back to, say, the US market, what EU has to offer. Where did you see the potential for India, and therefore, how did energy become such a focus?
So before Transition VC, I used to work for a global fund, and we didn't really have any geography boundaries. Tech, not energy. So it was very simple for us. If you look at historically where venture capital has done well, or startups where venture capital is invested has done well, is where you clearly see a massive market and you enter when it's small, right? For me, it was just clear. I wanted to find what that next big massive market would be, and which is not very big at this point of time, right? So I initially thought it would probably be mobility. That's where I personally started investing before starting Transition VC. And eventually, when I made a few investments, I realized energy transition per se is the way where we can perhaps make maximum impact from a climate point of view. And when we did the math, we realized it's a $200 billion opportunity just in India by 2030, right? So that's how, if we look at benchmark, see, India has some strengths. India does not have, say, best breakthrough technology innovations. But we are very good at engineering. We're good at application engineering. So focusing on that and collaborating with, say, EU and US markets and see how we can bring those tech and build for India and emerging markets is what our focus is. And I believe that is what will make the biggest impact and value creation.
Great. Where do you see, actually, do you see more sort of micro funds and, new funds coming like you, who probably are faster into the transition than you did?
Yeah, I mean, I wouldn't call ourselves micro funds, but yeah, I think there are quite a few micro funds coming up, and which is very, very good. There are a few climate-focused funds that have come up as well. I think that helps the ecosystem a lot. If you look at, say, US and Europe, there are quite a few energy transition-focused funds as well, and they are in like on the second fund, third fund life cycle, right? So I anticipate a lot more sector-focused funds, especially energy transition, coming up over the next 3-4 years, which is amazing because we don't really see them as, or anyone as competition, right? It's all about collaboration. We cannot solve the climate problem. It's so large, probably the entire venture capital community cannot solve for it, right? The corporates have to come together, the government has to come together, and all of us can just put in our best effort and see how we can minimize it. Climate change is not an option, so it's all about climate resilience and then eventually climate adoption, right? So I think we got to work together. We can't work for ourselves. Then we're not working towards our agenda. Right?
That's the message, yeah. Okay, you pointed out something about philanthropy, right? Stats say that less than 2% of globally deployed philanthropic capital goes into climate. In India, it's probably less than 0.5%. And that's a concern a lot of us have to dabble with on an everyday basis. And if you look at the split even within the Indian philanthropy ecosystem, and this is where I would love to see if there are any corporates in the room who want to contribute here, right? Even as of last financial year, more than 55% of corporate CSR deployment has gone into conventional sectors like JEDI, healthcare, etc. Less than 10% gone into climate. So if you have somebody from, I think Prashant was there, and somebody from Pano, we want to take on this as to what would it take for corporates to do, a long-term, your mic there? Yeah, long-term commitment towards initiatives in climate. Not only incubation, whatever else also that you would want to do. I think we have Garima from Pano.
So for communities, so for corporates, communities are at the core of our programming. And communities are the ones who are going to be the most affected by the climate change. For us, we can have a lot of technologies and we can still manage to live in our AC buildings and survive. But for farmers at the grassroots, it's very difficult to sustain. So although we are working in agriculture, while if we ignore the climate resilience at the grassroots for them, it will be very unfair because they are the ones who are going to suffer. And it's just not about agriculture, it's going to affect in a lot of other ways. For example, water. If there will be incessant rain and water availability is already, such a hit. So if you don't work on the climate aspects, it's very difficult. And there's a whole lot of things happening on carbon credits, creating forest. But that is such a long-term program because you have to stay invested for at least 10 to 20 years. But for a corporate where the CSR Act says that you have to be there for 3 years plus 1 year, how do you do a 20 years agreement?
Can you elaborate on the constraints that comes along with that CSR deployment?
Yeah. So basically, we have to do CSR in a program mode. Then the program has to end in 3 years, plus 1 year can be an extension. And if we want to create a, say, mini forest, so you have to at least stay there for 20 years. And I cannot do an agreement with the NGO partner for 20 years. NGO partner cannot do an agreement with the farmers to not cut trees for 20 years. How do you stay invested? So for even communities to understand what will be the long-term vision, it's such a difficult challenge to stay invested in that space. Even if then you do it and a calamity like COVID comes in, what will you do? And I will maybe move on to some other space. NGOs also will be moving to people will be moving in. So how do you stay connected to that vision of where we started from? And throughout that period, if it's not consistent, then how will we move forward? So these are some of the constraints. Even if we are working with FPOs, so these farmer producer organizations, for 3 years, then I will move on. And within that 3 year, they will just get to understand what kind of business that they have to do, and they will develop their strategy, and then we will move out at the time when they need the most hand-holding support, market linkages. So that is such a huge challenge for corporate side as well, because one wants to stay invested and support the incubations or FPOs and such businesses for social causes, but there are a lot of compliance issues, community issues that one has to consider. Thank you.
I think this is an interesting perspective from the CSR donor, right? And maybe we want to try and mirror the CSR donor perspective as well. We have Anand of Axelo. Axelo sells e-bikes, e-cards to blue-collar workers. And I think in his own capital access journey, he's been through the works, right? Trying to look at VC investment to impact investment and access to CSR. And I just want to get a sense of, from that journey, you found that niche of CSR being relevant to you. While you still believe that a VC funding, equity funding model is ideal in terms of building scale, there are all of these alternative models that are helping you sustain and build primary scale for, right? So just want to get your perspective on how it's helped and where some of the challenges for you have been.
Yeah. So I believe it's a mix of the capital, philanthropic, CSR, plus...
Can you tell what your company does?
Okay. Yeah, so at Accelero, we manufacture electric bicycles and conversion kits for cars. Our target segment are the underserved segments, the blue-collar workforce. So with more than a decade experience in the energy, when I founded Accelero in 2017, India was not bullish on the e-bikes. We were saying that Europe में e-bikes का बहुत ज़्यादा scope है, US में scope है. So I realized India is the second largest producer and consumer of bicycles worldwide. 50% of our population run on bicycles in the rural areas, tier 2, tier 3. Then why, like despite China, US, European countries, why India can't have an e-bike revolution? So that thing disturbed me. So I started searching upon it and found that we are having e-bikes, the imported e-bikes at 28,000, 30,000, 35,000, beyond our per capita income. So with that challenging thing, we developed our own technology, nothing imported from anywhere. हमारा देश है, हम technology बना भी सकते हैं. As the guy said that India is full of the engineering minds and everything. So we developed our own technology, and we are able to reduce the price of e-bike to 16,800 now, less than a mobile phone. Now, during this journey, yes, it was like very tough, but in the VC world, Social Alpha, Celco, they supported us. They trusted on us when no one else is trusting. So I just told them one thing, that we are a for-profit organization, yes, and I believe only in one thing: impact means business. If you are creating a change in anyone's life, that's impact, and that change will force that community to buy your product ultimately. So the VC money, the philanthropic capital. So one example of philanthropic capital, FedEx. FedEx came up with a program last year. The cards and all we developed with their support. I am a bit disappointed about the Indian companies, that why the ones coming out of India and supporting India in its innovation, and why can't our the topmost companies in the country can support the CSR funds and everything to the ventures like us.
Yeah.
But I think it's a long journey, so.
I think that's a perfect segue to you, Ryan, where there's two aspects, right? One is a venture looks at the VC world and says, that is my go-to mode of capital raise. And so there's a certain added burden on your shoulders as to why you're not deploying money. But on the other side, there is this kind of ecosystem which is yet to develop, right? In India, assume R&D support, assume corporate philanthropy and UHNIs, then it's a much more friendly environment.
Yeah, my opinion might sound antithesis to what this is, right? I understand there's a very, very small philanthropic contribution towards climate. I honestly understand why. Especially country like India, in my opinion, there is a greater need in education, in healthcare, in capacity building, and that's a dire need today. Climate is important. We all have to contribute towards it. I'm dedicating my life to it. But I understand why a country like emerging market like India, which when we look from a rural point of view, there is need for healthcare and financial support, education, a lot of those, right? So it's great actually that philanthropic money is moving towards those aspects. However, it's also smart enough to allocate a small portion of it. It could be lower single digit towards climate in the portfolio one's building. I think that should probably be more of an advocacy that we all should probably do for Indian corporates in CSR, etc. Because eventually this will also come to us. Like this will become a challenge, right? So I think the way it's going is probably fine, but it's more about how we should address it for the future. About your first question, how can we support certain, say, startups like yours or anyone else? We're doing our best in the way we can, right? So we are also fiduciary responsible for the capital that we raise. So we also raise capital, just like every other startup, right? And there is financial implication to it. And as VCs, impact is important, but financial return is equally or sometimes even more important, right? So what we want to see is a massive market where they'll make those massive revenues. The investment decision will be completely driven on the quality of the startup and what revenues it can generate and how much money it can make, literally, right? And what it can contribute towards decarbonizing electrification. So that's what we're doing. So if you look at a startup which does not contribute towards electrification or decarbonization, we will not invest in it, regardless of what profit it will do. So a mix of both is the sweet spot for India, is what we believe, at least at this point of time.
I think I like your point on why philanthropy is towards these other problems. I think it's more like these problems are in your face today, and they've been, so hence the capital goes there. But I hope the percentage doesn't remain a single-digit decimal, and we don't want to see climate problems in our face on a daily basis.
Yeah, so how do we advocate that? So that's happy to
part
contribute,
of what
right?
we are
So,
doing. Yeah, cool. Yeah.
No, and I mean, you imagine the ill effects of poverty and starvation 30 years down the line when the weather is not conducive, right? I mean, so it goes hand in hand, really, and I think that's the point we're all trying to make. I just want to, while Ryan pointed out about his fiduciary relationship and therefore what is investable versus what is not, typically startups have to position themselves in a way that you are able to show ROI, right? I mean, essentially on this side of the table, they're saying, how do I generate alpha? And on the other side of the table, people are trying to supply themselves to that particular demand. When you supply yourself to that demand, a venture typically says, here are my differentiating factors. This is the USP, this is a white space, so on and so forth. An interesting white space that I came across recently is one that Gaurav through Cognitensor is trying to solve. They said, BRSR reporting is super important, and there's a certain mandate that the government has laid upon corporates of a certain scale, right? Now, it's interesting to me because this is a way for you to scale where you've looked at a certain lacune, right? Where there's a certain policy mandate, and suddenly that gives you that 10x, 50x jump, simply because you were able to notice or smell a certain opportunity. So how has that built for Cognitensor some scale? While you answer that, just want to get a sense of what you believe the future of ESG in general is from you, Gaurav.
Yeah, thank you. So at Cognitensor, we have this, ESG platform called Sustain 3P, which basically helps a company with ESG data management, global compliance, and reduction opportunities. Right? These are the three things that the platform does. So when the BRSR was introduced, it was one of the first, government-mandated compliance reporting initiatives in sustainability in the world. So even today, like now, we have the Singapore, Europe, countries adopting this. But India can be proud to say that we are one of the first who have done that. And that really brought a lot of positive momentum to the climate tech space as well. Anyone who was solving for helping companies come out with BRSR reports in a more easy fashion. Simply because now this went from a good to have to a must have, right? Compliance burden is such that every company in the world will allocate budget for it. They may not allocate budget for a net zero target. I've had CEOs tell me that net zero will happen in 2030, 2040. Tell me, how can you help me next week, right? And that is where you need to tell them that, okay, for BRSR, for example, there are then certain niches to it. Like there is a new, policy that SEBI has rolled out that you need to get a third-party audit on your BRSR if you are at a certain scale. Next year, it's for top 150 companies. Over the next 4 years, it goes up to the top 1,000 companies. So for that, we introduced something called an audit trail, where every data point you ever brought into our platform, who uploaded it, when did they upload it, what was the audit trail behind it, everything can be churned out. So
but when you do this, has this given you the ability to go to a VC, right, and say, here is how, as a early entrant to the market, I will be able to capture a certain section, and therefore you're able to show profitability sooner, or you might show tailwinds that will help you scale, right? Now, what you've been able to do through BRSR is also expand your solution and platform, right? It's driven revenue for you to now think of new areas, new white spaces. So just want a little bit of a sense of that.
No, definitely. Like any VC will want you to validate your business model. And how do you validate your business model? You get customers. Simple, right? So if you are able to show that, like at Cognitensor, we can just say that we've never lost an ESG customer ever since we started doing this. Because once we enter it, we become best friends with their ESG team. See, these ESG folks are not masters in sustainability, right? That will happen 10 years later. Right now, these sustainability folks are HR heads and compliance heads who have had sustainability handed to them. Right. So if you sell them on sustainability features, they will say, okay, let's see, maybe next year. But if you are able to tell them, this is the problem that's happening at your company right now, and this is how I can make your life easier starting next week, then they will listen to you. And then you can go and tell VC that, you can see these are all the customers I have in pipeline. These are the ones who've already given me change orders. And this is the proof that I can scale.
Got it. Very quickly, your predictions for this particular ESG, carbon, and I think, Ryan, if you could also jump in there once he's... Yeah.
Perfect. Oh, definitely. You see, I think carbon trading is really opening up in India, CCTS and things like that coming in. The carbon exchange being set up in Gujarat. So I think in the next 5 years, that should be one place to look out for. It could be for companies generating carbon credits, trading it, making an ecosystem out of it. But for sure, I think that is one area where, because then that also ties into energy transition, that also ties into electric mobility. Carbon credits are applicable across, right? So I think that's one area definitely we should look out for.
Perfect. Ryan?
So my thoughts on this, right, as a venture capitalist, like personally what we do, right, what we look for in founders and solutions, it's not about it's not, let's say, it's not only about what has been achieved today and historically. What we like to hear and see is visionary founders who see how the market's going to evolve and build accordingly, rather than react to certain policy that is being made and then provide solution towards it. I'll tell you my opinion on a platform that's, say, tracking and reporting for the regulation's sake. That's something we as Transition VC will not invest in. And might sound antithesis again, right? A lot of other funds have invested. What we want to see is solution. Not just tracking and reporting, but understanding where the emissions are coming from, build those heat maps for certain industries, and provide solutions to the customer, which not only reduces carbon emissions, but also cost reduction. So we believe rather than a horizontal approach, a vertical approach where founder has deep domain expertise in couple of those industries and then go deeper. So the platform can just be like a gateway, but solutions is what the companies in India today need, right? There might be pressure from their customers who are, say they're part of a global supply chain, their customers want to go net zero by 2030, 2040, 2050, whatever, and they have been forced to report, or the CBAM regulation that we saw in Europe. Those are triggers where they are complying with, so that they don't lose the customer, which is, in our opinion, more like a reaction. And yes, there will be revenue to be made. But will this be a game changer company in the future, or plausibility that it could perhaps be? Our opinion is a vertical approach, providing solutions, which is also giving them cost reduction, is probably the way to go, is what I think. I can be wrong, but this is how at least I think.
I want to move to debt. Yeah.
Just very quickly, I want to double click on that, and Nachi, all yours after. I found it interesting though, that's why. And what is it about horizontal solutions that is unattractive today, right? I get the argument for a vertical solution that gives you more access to a customer, therefore insight, and therefore the ability to build out from bottom up. But what is it about a horizontal platform, right? And we've seen horizontal platforms in the e-commerce world, for example, do well. What is it in your perspective that it isn't so attractive?
No, I'm not saying it's unattractive, right? It will do well. It's a regulatory requirement. They would make money. From a VC who wants to look at a massive scale, which would attract customers not only for compliance sake, but also value add. A combination of that is what we believe is a game changer, and we want to invest in something like that.
In other words, it won't satisfy your asset class in terms of the return you're expecting also, because it's not a category disruptor eventually. Yeah. So I think I'll just move on from philanthropy to sort of what goes on in the VC deployment world, right? So if you look at these graphs, right, the first one on the left talks about how equity investments have, what all sectors they've covered in the last 3-4 years. And within climate, it's really good to see a few sectors take off and a few new sectors like circularity and, climate resilient agriculture catching up. And 4-point-something billion deployed in the last financial year on the equity side. But then very interestingly, you see a number there, $17 billion deployed as debt. Here I would want to probably bring in Sai, because you're sitting right in the center, Yunus Business Fund, who have been partners in NSRSL, and you keep coming and saying, I won't be the VC partner, I will be the NBFC debt partner, especially working in the circularity and agri space. What's your take on how important a role debt is going to play in the future? Now we're looking at a equity versus debt ratio of around 1:4x. Where do you see that coming into play across sectors? And if you want to point out 1 or 2 sectors where it will be more useful than not? Just talk. Extra mic here.
No, so I think if you look at
Thanks.
a lot of equity capital slash grant capital, all of that would have gone into experimenting an idea, piloting an idea, whether CSR funding and incubator funding, the idea, or whether it was like a project that they did with an NGO and then that took off. That's where a lot of equity kind of comes and plays. But post that, once you gain certain traction, I think that's where debt comes and multiplies a lot. While debt cannot, let's say, people are raising $5 million, $10 million, all of that. Probably debt will not give you those kind of numbers, but debt will give you certainly that leverage that you can sustain your business. So growth capital, you can still take equity and scale up. While working capital, those kind of financing is where probably debt comes in. In the Indian space at least, I think this will see a very different number because capital expenditure wise, you will see a lot of debt that has gone into, let's say, solar, wind, those kind of sectors, especially where it's expensive. But working capital wise, you will see a lot of debt which is played into agri and waste, right? Actually, going back to some the periodic table kind of chart that you showed, some of them were in green, but I really felt, or some of them were in orange, but some of them were not green per se in the Indian context, or not orange per se in the Indian context, right? Like solid waste management is something that probably is a big thing, at least in the circularity space, or even in the debt space, in the Indian context, as well as funding. But here it's kind of in the orange or emerging spaces.
In comparison to the mobility space, in terms of traction and capital, that's how we were trying to interpret it.
Right. So debt is where I think debt plays a more stronger role. One in more mature businesses, getting it to be more stable, as well as addressing working capital rather than growth funding requirements.
Any entrepreneur here who's tried to raise debt specifically beyond working capital, asset financing, lease financing? Anything? Anybody here? No? Okay.
And I could share like the troubles of an entrepreneur that we work with in raising debt, right? So there are venture debt funds, which is great, and we need them in ecosystem. You said 1:4. Early stage, it's not even early stage. I would say it's Series A plus. It's like say 1:0.25. That's how it works, right? One equity, 0.25 being debt. Sometimes 0.3. I think what change is probably required in, say, from a lender's point of view, is to put in that effort to understand the business model, and how the revenue is flowing, and then price it accordingly, right? So most of the lenders today work on a very checklist-driven model, where they say, okay, if you have a marquee client and you've done 3 transactions with them, blah, 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 you've raised equity money, I'm going to give you X, without really knowing what kind of impact it's going to make. I think we need more capacity building in lending for them to actually understand the business, like how equity investors would do, and then give debt and price it appropriately. Because I think that's a blank space, and there's a massive opportunity one could do. Like if I wouldn't be doing equity venture capital fund, I would do a venture debt fund, because I clearly see a massive gap, or maybe we'll do it later. So I think that's a gap. So we want certain capacity building to be done in this space, I would say.
For the entrepreneurs or for the lenders?
For the lenders. So entrepreneurs they know everything about the business. They're doing it, right? So the lenders need to like spend a little bit more effort and get away from checklist and understand where the money is actually going.
Thanks. Okay, so in the interest of time, we just want to like take 1 or 2 light examples, sort of heroes who built out of the sector, and have one closing point. One of the few things that NSRCL does is, the impact angle and the commercial angle, like they both go together well. And the teams leverage from each other's strengths and networks, and so do the entrepreneurs. So we have an example, Mini Minds, who's been, again, actually, like how you were talking about the mafia, right? The founders came off from Log9. Anupam and Arvind were the founding team there, and then came up with Mini Minds. And because they felt they were closer to the circular initially than the mobility space, they were interacting with the impact side of things, raised a lot of impact capital. We also could refer them for some, help them set up their first ever factory. And now they've gone on to raise around 350K USD from different investors. So this is one of the examples where we felt like, hey, the impact capital and the networks were leveraged and used in the first 1.5, 2 years of companies setup. And I wish them luck to grow, make more names. Banhide is another example from our mobility cohort, does something similar, and we've been able to leverage in terms of networks. We have Archana giving them a lot of impact metrics framework. We have, so we feel like both the worlds have to come together, and that is probably only going to happen with more such interactions, getting entrepreneurs from both sides, getting players from both sides to talk to each other, and which is all part of building an ecosystem. So I think I will stop there. I think this is Nihal's favorite topic on ecosystem pipeline, and I'll let you do the closing.
No, I think, 5 years back, I look at revenue, stage, commercial, tech. He looks at social impact. And I'm sitting here at a conference by IIC, impact investing, and that would have never happened, right? I think the two worlds were slightly different a few years back. But I think everyone's realized that while you look at impact first as a philosophy, real change comes when you're able to really create disruptive scale, right? And there's a certain commercial component to that you have to address, which is fundamental. And so I think that's how the worlds are colliding. And Ryan, I think on similar lines, maybe your closing thoughts on how you're seeing what were two different worlds collide into one, and maybe you can take some examples, right? I think while you're a VC, you're possibly trying to build that kind of micro community yourself, right? Maybe there are corporates you work with, maybe there's philanthropies you work with, or at least you want to be able to plug in for you to be able to create scale for your ventures. So just some closing thoughts, and then we'll conclude.
So you're right. So we're doing it internally. So the idea is, since we're so focused on a certain sector, a lot of our portfolios would have synergies between them. And a lot of our LPs also are people from the industry. So product validation, opening up doors. So we're building a club sort of a thing with people who've built scaled large companies, sold companies. They've come on board as investors, advisors, etc. And startups who are in the same domain and can help each other, and we bring those synergies out. Yeah.
Perfect. So I think very quickly, I don't know if there's any other questions I should ask, is does anyone have anything to address to either one of us or some of the people that spoke in the room? If not, I see some phones taking pictures. Fantastic. Okay, somebody has a question.
Hi everyone, thanks for taking the time to chat with us today. My name is Adit. I'm with the Institute for Climate Innovation. We're a new non-profit think tank focused on decarbonizing some of the hardest to abate sectors in India. So my question for you is, we've talked a little bit about different finance instruments. We've talked a little bit about ecosystem building. I'd love to hear your thoughts on the role of organizations like think tanks and non-funding non-profits in the space, and how we can help sort of enable you do these sorts of things and make better investments and, of course, better impact.
So very quickly, just weighing in, and then Nachi, you jump in. I think we work with think tanks across the board anyway, right? As an incubator, for us to be able to understand, what is the broader understanding of certain government entities. We know that think tanks work closely, right? So an RMI and a Niti Aayog, or WRI in spaces like urban mobility, so on and so forth, right? So I think we're well aware of the impact that they have. I remember telling, I think as recent as yesterday, one of the corporates that we spoke to that if there's anybody that you want to try and understand the policy landscape from, you speak to a think tank, right? So from that perspective, I think it's a really crucial partnership that anybody in the ecosystem should try and leverage for. The other thing I would say is I think from a think tank perspective, it also allows us to really introspect into what we do, right? So think tanks give us the ability to help us with, say, monitoring and evaluation, where sometimes we're siloed in our thought process as an incubator or a VC or whoever it may be, and it's just a second way of being able to fact check or have a check and balance. So yeah, that's.
Yeah, I think, I mean, it's good that you were here and you brought this up. We spoke on the philanthropy angle, we spoke on the incubator, VC angle. There cannot be, this world cannot exist without think tank like yours, because one is we can't build that capacity, right? I am still an incubator out of a business school. Even if I were an IIT Madras, I do have R&D, but that is still siloed within what I do in the academia. I'm not serving for the sector beyond a point. So we definitely need, and his team works with ARAI, we work with CEW, and I think this is a good example. I'm just putting up like the closing comment.
Thank you, Nachiket, for that excellent moderation and being cognizant of time. We really appreciate it. And of course, the entire panel for a truly dynamic and interactive discussion. Lots of value addition here today. As we conclude today's session, I'd like to extend my deepest gratitude to all esteemed participants in the room today. Conventions like these are what we truly believe to be the catalysts of the India Impact story, and we hope it was successful in doing just that. We can't wait to see you all at Prabhav 2026. Thank you so much. I would now like to invite on stage ISE CEO Girish Aivalli for the closing remarks. The floor is all yours, Girish.